Yeah, thanks, Tim. Yeah, it's interesting listening to the prior presentations and contrasting it to what Sarama does and where we work. We're a West African focused gold exploration and development company. So with that, I'll just get you to please go to the next slide. Forward-looking statements, I'll take that as read and get straight into it. Sarama is located in West Africa, which obviously anyone who's, I guess, familiar with the gold environment, particularly, I guess, ASX listed companies that we, I guess, familiar with this part of the world when it comes to gold exploration, development and production. It's a pretty well-trodden path for Australian explorers and developers. Sarama operates in Burkina Faso, which is a landlocked country bordering Ivory Coast and Ghana and Mali. We've got a large 100% owned land position in two of the most prolific belts in the country. And the value of the company is underpinned by a Sanatura project, which hosts around a 3 million ounce resource. A third of that's in oxides and 2/3 it's over 2 grams a tonne. The company is dual listed, so we just listed on the Australian Stock Exchange in May of this year. We're Canadian registered, but we've always been based in Perth, Australia. So I guess the history of the company, we started out with a Canadian listing due to, I guess, my background, which was running quite a large gold development company in the DRC, which was listed in Congo, which was listed on the TSX. That was bought for 700 million by Randgold and Barrick, and is now doing 800,000 ounces a year. So that's why Sarama ended up in Canada, but really we're an Australian company and we're pretty happy to have the Australian listing. So with the Australian listing, there was an opportunity to recapitalise the company, and we undertook our first major drill program in 5 years. It's a shallow, high value focused program with just really focusing on high probability mineralisation, so basically near resource and extensional work. The initial results from the drilling are very good. They're probably in line with or better than expectations. We've intersected a lot of high-grade near-surface oxide mineralisation that sits outside the current resource. So it's all incremental ounces and highly accretive to any development. We've also made a couple of new discoveries in the drill program so far, and we've still got a number of high-grade targets to drill in the upcoming season. So I'll get you to move to the next slide. As with any mining company, I think one of the key things is the management team and the experience, particularly when you operate in jurisdictions in Africa. So we've got a very experienced board and management team. We've all worked together for quite a while. The chairman of the board is Simon Jackson. So he's the chairman of Predictive Discovery, who's got a very exciting new deposit in Guinea. Simon's also on the board of Resolute Mining and also spent quite a bit of time in North America. So my background's mining operations, so probably a little different skill set for where the company's at. And then Adrian Bias has had quite a lot of success as well. He's a geologist by background, and Steve Snunevich is a project feasibility and development guy. So it's a small board, but we pretty much tick all the boxes from a development company's point of view. We also have a management team that's worked together for some time. Pretty much all of us are founders of the company. So a mixture of operations and exploration experience, but a lot of that is also in emerging markets and Africa. So I think for us as well, the capital structure is in fairly good shape. I'm familiar with the Canadian junior will typically note quite a significant warrant overhang, so we don't have that. Capital structure is fairly clean. Obviously still have cash in the bank as a result of the raise back in May. And really we're trying to deploy as much of that into the ground as we can. We have a very solid shareholder register as well. A lot of them are long-term shareholders and have been supportive along the journey. So next slide, please. Burkina Faso itself, it's a very well-established mining jurisdiction. Probably the most notable Australian company of recent times is West African Resources, who have got the high-grade, high-output Sanbrado mine and have just acquired the Kiaka deposit and I think they're looking to be a 400,000 ounce a year producer in the next couple of years. So it's a very well established mining jurisdiction. We operate in the southwest of the country, in the Hyundai belt. It's a very well endowed gold belt. It's around 20 million ounces in resource between Endeavour and Sarama and Fortuna Silver. So geologically and geopolitically, we feel it's a pretty good place to operate. Next slide, thank you. Looking more closely at Sanatura projects, this is really the lead project for the company. As mentioned, the resource inventory is just shy of 3 million ounces. But within that, there is a high-grade component. So when we look at a higher grade cutoff, we have around 2.3 million ounces at 2 grams or better. The oxides account for about a third of that. So that's pretty important from a development point of view. Pretty much gold starts at surface. We're actually targeting to have the first 7 or 8 years just pure oxide feed through a basic CIL plant. The drilling that we're doing now, it's really aimed at significantly lifting and improving the pit constrained oxide resource. All our resources that I'm talking about are pit shell constrained. So we're looking to really upgrade the quality of those ounces and grow them. So hence the shallow, highly focused drill programs that we've got. We also have around 300,000 ounces that are unclassified that just need a bit of infill drilling that will come into the resource as well. And we also have a number of high quality regional targets that we're looking to drill as well. Next slide, thank you. The Tankora deposit, which is probably where most of the ounces are based. Most of the resource here, around 80%, sits within 2 deposit areas, the MM and MC. So around 80% of that. And as mentioned, there's a high grade component to this sort of high grade cut. We have around 2 million ounces at 2 grams or better. The bulk of the strike's only tested 70 meters. And it is a very big mineralizing system. So we have around 16 kilometers of semi-contiguous mineralization drill tested and 12 kilometers of contiguous mineralization. And I think importantly to note is that mineralized corridor runs for another 5 or 6 kilometers onto our neighbouring permit, which is held by Endeavour Mining. So people that may not be familiar with Endeavour, they're a Canadian and UK listed company of a market cap of about 6.5 to 7 billion. They've got the Bantu project next door to us, which is around 1.5 million ounces. So there's actually, quite a bit of gold in this area. If you include Endeavour's ground and our ground, there's around 4 million ounces within a 5 or 6 kilometre radius of that Tankora deposit. So next slide, please. So looking a little closely at Tankora, you can see there's a couple of pit shells there. So, once again, quite substantial. So the MM prospect, 1.4 million ounces, pit constrained resource, and MC 500,000. But you can see there some of the historical drilling. So it does have very high grade areas that we have focused in on. But most of the resource is within 150 meters of surface. But if you look at some of the historical drilling there, 31 meters at 7, 10 at half an ounce. So they're very, very, very good hits. So they bode well from a development point of view and being able to front load a mining schedule. Next slide, thank you. Looking at the recent explorations, we've done around 20,000 meters of drilling since May of this year. We've been primarily focused on this mineralized corridor I was just talking about, mostly in the kind of mid to southern part of that. Importantly with that, we've put out 4 news releases so far, and we have another one out shortly on new areas that we've been drilling. But one of the areas we've drilled in the south, we've got a whole new analogue. Geologically, it's different to what we've seen in the belt here before. Most of the mineralization you see there that's kind of fairly linear. It's a porphyry dike intrusive in this particular area, lower tenor, probably around 1 gram per tonne. It's got a 20 meters thick. What we have just drilled is a new high grade zone. It's flat. It appears to be a later stage event, and it's quite exciting. If you look at the historical drilling and the latest drilling into that area, into this flat zone, they're pretty solid results, up to kind of 10, 11 grams true thickness. And importantly, this sits within oxide, so it's near surface. It doesn't daylight. So we think that this has the prospect to add quite materially to the resource. It'll be all oxide, free milling material, and shallow. So obviously fairly low cost to mine. We've got another couple of areas like this, but when we look in the belt for geological analogues to this, probably the closest is Endeavour's 5 million ounce Hyundai mine, which is about 80 kilometres away. They've got one particular deposit within there called the Kari Pump, and the maiden resource on that was 1 million ounces at 2.7 grams. So this is very similar to that, but this only has 4,000 metres of drilling into it so far. So this was only a discovery made in June, so it's very fresh, but it does give us, something very exciting to go at. Next slide, please. Looking to a different deposit area, so this still sits on the Sanatura project, but this is a deposit we bought from a Canadian company called Ozone Gold. This was a stranded asset for them. It's called the Bondi deposit. We're yet to get some major drilling into this. This has just been getting re-permitted, which was done just before the Australian IPO. But this deposit in itself, I think if it just sat within the company, would more than justify our valuation and multiples of where it is now. The resource here, pit constrained resource, is around 500,000 ounces. But the thing I guess we note when we bought this is we remodeled all of Orzone's raw drilling data. And what we, I guess, did note is that the top 70 to 100 metres is very well drilled. That geologically it's fairly well defined. But when we remodeled the data, what became apparent to us is the high-grade shoots that sit within the deposit that really haven't been targeted at all, and the deeper drillings is very sparse. So you can see in the north there, or the left-hand side of the image, you can see some very high-grade blocks in the block model. They're 2.5 to 5 gram blocks. No drilling really under them at 100 metres or less than 100 metres. So these all represent very good targets for us. And then there's another 150 odd thousand ounces in the inventory to come in yet. So if we just go to the next slide, we'll just go and flip through this one. This is just a pit shell for Bondi. And then we have the regional targets for Sanatura. You can see here, probably the important takeaway from this slide is there's still a lot of runway for exploration. But we see at the Tankoro deposit, we have Endeavour next door, and just in that area there's 4 million ounces. So it's a very well endowed part of the belt. We think that there's still a long way to go. If you could flip to the next slide, please. Next one. And I guess if you look at it, the company, we've got a very strategic land position in a very prolific gold belt in Burkina Faso. A large resource underwriting the value of the company, a lot of exploration runway, a compelling valuation, and a very high impact exploration program undergoing now. So really, there's a lot to the business. We view it as an advanced exploration play with multiple angles to development.
Thanks, Andrew. Now, an obvious question, and something you haven't touched on, surprisingly, is the political instability in the area. I mean, it's described as one of the most volatile and porous countries on Earth. How do you manage that risk, and how are shareholders and potential investors, how can they perceive you will manage that risk?
Yeah, look, I think that's a good question. I think anyone that operates in this part of the world need to be mindful of the regional dynamics. It's not just limited to Burkina Faso, and I think it's important to understand the granularity of the political and the security situation of where you work. I think if you look at Burkina Faso specifically, it's got a modern mining code, so the framework's in place for which you operate as a business. And then I guess looking at the situation in country, it's really understanding, I guess, the drivers for the various instability in various parts of the country. So I think where we work in the southwest of the country, is preferable when you look at what happens kind of in the northern borders and the east. But I think if you want to look at it, if you look at West African Resources, where they operate, they built Sanbrado mine, on time, on budget, in Burkina. At the moment, there's a Canadian company called Orezone building Bombore that's running on schedule, on budget. So I guess the key point is understanding where you operate in country, what the local dynamics are, but you can still get work done. You can still get projects built. You can still get projects financed. So the whole drivers for the regional political and security situation is quite complex. We're not blasé about it. We look to understand what's required. I was on site in May where we work. We don't run a security fencing or anything where we operate. Other parts of the country, have quite heavy security. With respect to the various, government changes or coups that have happened this year, it hasn't really impacted mining operations for any companies. I guess you'd view it as a change in the head of the government, and the bureaucrats keep running the department. So, I think it's something that, going back to the management team that I pointed out at the start, it's important that you have people work for you that understand those things and how to operate within them.
I mean, someone like Endeavour Mining, who you've spoken about, have obviously been able to operate within the region. What have you learned from them in terms of how they've kind of managed this political instability in the background?
Yeah, look, I think Endeavour, they're a big company. Obviously, they take a fairly hard approach to security. They're pretty well plugged in everywhere, but they operate, in a number of countries. They're in Mali, Senegal, Burkina, Ivory Coast. So I guess they have an overarching view, but I think, as with anyone, it's really engagement, with the local authorities, the various levels of government, and ensuring that you're properly tapped into that, and making sure you're aware of what's going on, and you've got the relationships with the local communities and local stakeholders to really understand what's going on. But I think, kind of going back to it, I think when you look at the companies that are operating, and the fact that, like Lycopodium, which is an Australian engineering company, has built the last 3 mines, last probably 4 actually, in Burkina Faso, and they're the guys building Bombore, and I would expect they'd do West African's next mine as well. So I think, it really just comes down to understanding the environment where you work, and understanding the dynamics. And I think people look at a region or an area and blanket the whole country with the same risk, but I think you really need to get a bit more granularity on that. Obviously, I worked in the Congo before Burkina Faso in the northeast, so that was an area where you also needed to understand, how you work. And I think our experience is, just understanding that dynamic and having the relationships with the various people is a key thing.
Yeah, no, I can see that you've got that experience on your board. And so for 2023, what are the milestones and targets you're looking to hit moving forward?
Yeah, we started the 50,000 metre program back in May, so we're 20,000 metres into that. So we'd aim to get that finished by mid next year. When that's completed, we'll do a resource update. So historically, we add between 7 and 10 ounces per metre drilled. So if we get the same kind of addition, we'd expect to add kind of between 350 and 500,000 ounces to the current resource. So that'd take up around the 3.5 million ounce mark. But I think importantly, all the drilling's focused on oxides and shallow material. So we aim to get that finished by the middle of the year, do a resource update, and then start framing the project up for development. We've got a pretty good idea what it looks like now, and the economics and payback metrics look, pretty good off the current resource. We'd expect that to look even better. And by the end of next year, have a study out that frames a project up for development, so people can see what it looks like and see what we already know internally.
Right, Andrew, thanks for your time. We'll follow with interest. Good luck for next year, and have a nice weekend.
Thanks, Tim.